Hi, I'm Chris Roth with the Williams Roth Group. Our team specializes in representing buyers, sellers, landlords, and tenants for industrial real estate in San Diego County. Today we're going to do something a little bit different. We're going to sit down with Cody from Slack Capital, our go-to debt broker. And this is good timing because with the Fed meeting yesterday, we want to get an update on rates. Hope you enjoy it. Hey man, good to see you. Thanks for coming in, Cody.
Yeah, of course, I appreciate it.
So, good timing having you in here.
It is.
Yesterday was a pretty big day. 75 basis point increase.
Yep.
Second one in like what, a month or something. So clearly the market must be on fire and everything's going wrong, right? So
No, yeah, actually no. I mean,
no.
Fed Chair Powell had his comments,
Yeah.
and the market is reacting to the comments. But the truth is, the market was expecting a 75 basis point hike. Everybody had been talking about it, and
Right.
that's what happened. It's really about the sentiment of what he said and what the rest of the economy may feel. So it's really more of a go forward thing, but really rates actually went down yesterday on our side. Whether that happens
Probably
long-term or
unusual,
not,
right?
It is unusual. Usually if they're going to raise the base level rate, our rates go up too. But that's not what happened.
Right.
So it's not as simple as just freaking out and seeing a 75 basis point and thinking everything's changing. It's actually a lot more complex than that.
And so when you say it's all about the sentiment from that meeting, what was the sentiment?
I mean, the sentiment generally, well, Fed Chair Powell says we're not in a recession and they don't foresee that. I personally don't believe that, but that's what they're telling the market.
Yeah.
And you can see what the stock market is doing this morning. It's up again. And I think people are taking those comments to heart.
Yeah.
Whether it's right or not doesn't matter. Again, it's the sentiment. And the sentiment is the economy's doing okay. They're going to keep doing what they need to do in order to keep the economy doing what it's doing. And that's enough for now.
So fair to say the 75 basis point increase was kind of baked in from the last meeting sentiment. And then this meeting sentiment is basically saying we're not in a recession and things are looking better, or I don't want to put words in your mouth.
They do what they call a dot plot expectation among all of the different Fed chairs. And for the future, what matters from here on out is that they're also saying that there's another 75 basis point hike on the horizon, which usually should translate to interest rates being higher.
Right.
That's what we've seen.
Right. So maybe that happens in the near future.
But the fact is they've already drawn the line in the sand, and so we'd expect that the next 75 basis point to also be baked in.
Right.
So again,
in the coming month,
in the few months, it may be a little higher, it may not be, but what the Fed is trying to do is allow people to not freak out.
Got it.
And I think that's what we're seeing.
Just to keep this short, though, I mean, what in the last 3 months have you seen? Because this has been unreal, right? With all these increases.
In the commercial real estate space and the lending space that I really concentrate on, we're still doing a lot of transactions. Our pipeline is as busy, if not busier, than it was this time last year.
Wow.
Every transaction is more complicated. People are looking at
I feel that.
In very different ways, but there are still multiple bids on purchases. There are still folks that are all cash, some folks that are with debt. The debt metrics have changed,
right?
And so therefore there has been some changes on how a deal might underwrite. But every deal is unique, and every deal has to stand on its own. And so for that reason, there's not really a broad brush you can paint.
Right.
But the big picture is transactions are still moving. We're still doing a lot of purchases. What we're not doing a lot of is a lot of refinances, right? Because
well, that makes sense.
the interest rates are higher than they were last year. But I think the big picture thing to keep in mind is 2018, 2017, these were really good years for the commercial real estate space. And our rates are exactly where they were in 2018 and 2017.
Kind of back to normal.
Yeah, it's back to sort of a normal thing. The last 18 months of insanely low rates is not normal. And so looking at and thinking that that's our benchmark probably isn't helpful.
Sure. Well, thanks for coming in, buddy.
Yeah,
good
it was
to
a pleasure,
see you,
brother.
All right, man. We'll have you back another time. Hey, thanks for joining us. Hope you got a little bit out of that. If you have any more questions, make sure you reach out to Cody. His information will be on the bottom of the screen, and we'll see you next month. Thanks.